All right, I get this question a lot, which is how many units do I need to become financially free? And that's exactly what we're going to address in this video, so let's do this. All right, as you know, there are 4 ways you can make money with a syndication. Number 1 is with acquisition fees that you charge at closing. Number 2 are asset management fees, which are typically 1 or 1.5% of rents collected. Then number 3 is actually cash flow from the equity that you have as a general partner. And number 4 is the profits at resale. So there's 4 ways to make money. Now, the question is always, how many units do I need? But it's actually not a correct way of answering the question, because typically it's really based on the deal size. In other words, what are you paying for it? And you can trace a lot of the metrics and assumptions I'm going to show you back to either purchase price or more conveniently to capital raised. I found that using, for example, estimating asset management fees or things of that nature based on how much of property is valued or the capital is raised is much more meaningful and easier to work with than the number of units, because obviously the cash flow from a $600 per month unit could be vastly different than something that's $1,200 per month as well. So the per unit is not really an accurate measure of assumptions. What we've done instead, we've looked across about 10 different properties, the pro forma projections versus actual. We looked at what the actual money that we made is on acquisition fees, asset management fees, cash flow for the GPs, and profits at the resale. And it's not based on number of units, but actually on the amount of capital raised. So I'm going to share that with you. I'm going to share you a spreadsheet that you can download and tinker around with it yourself. Let's get right into the spreadsheet. All right. This first tab is how much multifamily to make $100,000, okay? And you see here all my spreadsheets. Anytime something is blue, you can edit the cell. If it's black, edit carefully. Those are formulas, okay? So you see here, for example, hey, I want to make $100,000 this particular year. How much multifamily would have to buy? And the short answer is $1.7 million in multifamily. That's not so much. That's not a very big building at all, right? So here's how this breaks down. So you have the acquisition fees right here. Now you have the property value is 1.7. The acquisition fees here is 3%. If you charge less, then put less in there. Typically it's 2 to 3%. That is in blue. So therefore you can see that 52,000 of that 100,000 is actually made of acquisition fees, over half. Now look at the asset management fees. We have found that the asset management fees are 0.3% of the property value. Again, this is not on a per unit basis, not very meaningful. This comes from looking at about 10 of our properties and look at the pro formas of that. The median, very tightly around the asset management fees, which are tied towards the rental that we collect, is 0.3 of the property value per year. So that's $5,200. Cash flow, again, we're assuming that the ratio of price of capital raised to the value is 40%. So in other words, if you're buying $1.7 million, you're going to raise about $700,000, and that typically includes closing costs, acquisition fees, renovations, or that kind of stuff. So it's typically 40% is a median that we have seen. Now, of capital raised, the cash flow is about 3.2% of capital raised. An average per year, that's $22,000 on average per year over the 5-year hold. Now again, this is very important, that cash flow is going to be lower in the beginning. It's going to ramp up, okay, to what your target is, and then it's going to keep going slightly higher. So the average of that is 3.2% per year on that deal, which is kind of cool. Now we're assuming that the GPs get 20%, so it's an 80-20 split with the LPs. Profits from sale, again measured as percent of capital raised, is 3% of capital raised, and that is annualized per year, is typically what the GP will make every single year. So if you add all these things together, you have $52,000 in acquisition fees, $5,200 in asset management fees, that's the acquisition fees, then $22,000 in cash flow average per year, and then $21,000 profit from the sale. Again, it's a 5-year hold, so the total number is going to be $100,000 profit at sale, and then the total cash flow is going to be a little over $100,000 as well. So to answer your question, on average, I got to buy $1.7 million of real estate to make $100,000 per year. Now I have a convenient tab here that says, well, how much income from $5 million in real estate. So it does the same thing but backwards. So you can put in whatever you want. You can put in 2 million, 3 million, 10 million, and you can see how much you can make and the breakdown of that. But what I want to talk to you about next is the third tab, okay? And this will really show me what is the cash flow over the next 10 years. Because I talked about that, well, the profit at sale doesn't come till you, well, sell it. So calculating an average to me right now is useful from an academic perspective, but not me putting money in my pocket, okay? So I created this here right now. Again, in blue is the value of the property that you purchase. And let's just say you're going to purchase $1 million property in that first year, 3 million the second year, 5 years, and so forth. And it breaks down what you're making here in acquisition fees. So it's 3% you're making off that. You're making $3,000 in management fees, and you're making $6,400 in distributions. So if you click on this plus sign right here, okay, you have the property details. It breaks down exactly how this thing breaks down. So you can look at property number 1. You're making $30,000 in year 1 because you're getting it at closing. You're making the asset management fees 0.3% of value every single year, $3,000. Now look at the cash flow though. See how it ramps up. Remember the average was $12,800, but in the first year you're not getting $12,800. So I'm assuming that you're making 1/2 of your target, 0.75% of your target, your full target, 1.25 times your target, 1.5 times your target, okay? So this kind of shows you a more accurate projection of what your cash flows are going to be. And then, of course, you get your profit at sale, which is 3% of capital raised, but times 5. All right? So that's not here. There you go. So you can look at what this deal looks like. And this is now repeated year 2, where I'm buying a $3 million property, and it starts over here. And this right here, you can see, is being layered, right? So now I'm buying $5 million and so forth. So if I continue that, you can see the sums of that. You can see very quickly after buying that second deal, you can see how you're jumping from $40,000 a year to easily in 6 figures. And you really only have $4 million of cumulative multifamily, which is why so many people are able to quit their job with just 2 or 3 deals, because they start with a small deal. $1 million deal is actually a relatively small deal. And then once you close $1 million deal, you're not doing $1 million deal again. Okay, you're doing a $2 to $3 million deal, or maybe even higher, and so on and so forth. And this is so powerful. So I want you to use these assumptions. Okay, I had these vetted with a couple of my peers. They're like, I never thought of it that way, but the numbers came on very similarly. I think you can make some reasonable projections based on the spreadsheets, based on the assumptions that I'm giving you here with regards to the acquisition fees, the asset management fees, cash flow distributions, and profits from sale. So I hope that's very encouraging to you. You don't need a lot of multifamily real estate. And the other thing cool to notice around this is look how the numbers go up. They go up in a staggering fashion. And you can even play around and say, well, what if I stop in year 5, right? You'll see the numbers maintain and slowly drop down. But you're making $1.5 million a year for the GP. I mean, that is an amazing amount of income, right? It really helps you create a legacy and a business that you can pass on to your children. So play with this a little bit. Use the assumptions. We did a lot of analysis on our portfolio here to give you really meaningful numbers. You can do maybe some financial planning around this. Again, we don't guarantee results. We don't guarantee that you're going to get the results we have here. We just looked at some of the pro formas that we've had in some of our deals and checked with a couple other people. And it seems to be fairly reliable. Again, not guaranteed. But hopefully you find this super useful in your own investing. And make sure you go ahead and download this Financial Freedom Calculator for active investors to help you along your path to financial freedom with real estate. I'm Michael Blanc. Catch you next time.